Today, we are going to talk about the top 10 dividend-paying stocks in the Philippines. We'll explore why, given the current state of the market, focusing on dividends is one of the smartest and most reliable strategies Filipino investors can adopt right now. It's a necessary shift in mindset from chasing rapid growth to building steady, passive income. Let's be honest, the Philippine stock market has gone nowhere for more than 10 years. While other markets like the United States, Vietnam, Indonesia, and even Thailand have grown massively, the PSE has remained flat and volatile. Add on top the weak economy, political uncertainty, a lack of foreign investments, and the currency that keeps breaking down, and the picture for pure growth investors becomes quite challenging. It becomes clear. If you are investing in the Philippines today, your best bet is to invest for dividends, not for capital appreciation. Because while stock prices can stagnate for years, dividends offer a tangible, predictable return. They pay you every year, every quarter, and sometimes every month. As long as the underlying business is profitable and stable, those cash payments keep coming, providing a consistent income stream regardless of market sentiment or headline noise. Today, we will rank 10 of the strongest dividend-paying stocks in the Philippines. Of course, the exact dividend yield changes every day because stock prices move, so what I will give you is a reasonable dividend yield range based on recent data. This list will serve as a powerful starting point for your own research and due diligence. Let's begin. Number 10. Meralco Dividend Yield Range, 4% to 5%. Meralco is one of the most stable blue-chip companies in the Philippines. It has a regulated monopoly in electricity distribution for Metro Manila and surrounding areas. Because their earnings are predictable, their dividends are steady, this is the type of stock conservative investors hold for decades. The price rarely grows fast, but the dividends are consistent and supported by real cash flow. Coming in at number 9 is Ayala Land REIT, more commonly known as AREIT. It consistently offers a solid dividend yield range, typically falling between 5 and 6%, making it an attractive option for income-focused investors. As the very first real estate investment trust in the country, AREIT has established itself as a pioneer and one of the most stable. Its impressive portfolio consists of high-quality, Grade A office buildings, primarily leased to reputable BPO and traditional office tenants on long-term contracts. The core benefit of REITs is that they are legally required to distribute at least 90% of their distributable income to shareholders. This is precisely why ARET provides such predictable quarterly dividends, making it ideal for anyone seeking a reliable and recurring income stream. Number 8. Citicorp Energy REIT or CREIT Dividend Yield Range, 6% to 7%. CREE is unique because its portfolio is tied to renewable energy land and assets. These leases are long-term and inflation-protected. Because power demand in the Philippines continues to grow and renewable energy is becoming more important, CREET provides both stability and a relatively good yield. Number 7. Ayala-backed MREIT, Dividend Yield Range, 6% to 7%. MREIT has exposure to office properties in high-growth business districts. While the office market in the Philippines has challenges, the company is backed by a large developer and their tenant mix is relatively stable. Their dividend yield is competitive and offers a good balance of risk and income. Number 6. Robinsons Commercial REIT or RCR Dividend Yield Range. 7% to 8% RCR regularly ranks among the top REITs in terms of dividend yield. Robinsons Land has transferred a strong portfolio of PESA-accredited offices which historically attract stable tenants. For investors who want a higher yield without going into extremely risky assets, RCR is a strong contender. Number 5. Globe Telecom Dividend Yield Range, 5% to 6%. Globe is one of the most dependable dividend payers for decades. The telecom industry is defensive. People use data regardless of the economy. Globe's dividends can fluctuate depending on capital expenditure cycles. but overall, it remains one of the best sources of passive income in the large cap space. Number 4. PLDT dividend yield range, 7% to 8%. PLDT consistently pays one of the highest dividends among blue chip stocks. Even if they are dealing with high debt and capex, their cash flows remain strong, and telecom remains an essential service. PLDT is usually considered a go-to stock for retirees because of its predictable income. Number 3. MetroBank dividend yield range, 6% to 8%. MetroBank has returned to strong profitability and is aggressively returning cash to shareholders through dividends. Banks in the Philippines benefit from higher interest rates, strong capital buffers, and stable loan books. This makes MetroBank one of the better high-yield plays today with lower risk. Number 2. DMCI Holdings dividend yield range, 9% to 11%. DMCI is known for its extremely generous dividends. Their businesses include construction, coal, energy, mining, and property. The dividend yield tends to be high because their earnings are cyclical. In good years, they pay very well. In weaker years, dividends may adjust. For income-focused investors willing to ride the cycle, DMCI is a solid pick. Number 1. Semirara Mining and Power dividend yield range, 10% to 14%. Semirara has been one of the strongest dividend machines in the Philippines for years. Demand for power continues to rise, and their coal operations remain highly profitable. Because they generate so much free cash flow, Semirara regularly distributes double-digit dividend yields. This makes Semirara currently one of the best dividend-paying stocks in the entire market. Final thoughts. The Philippine stock market has struggled for more than a decade. Economic uncertainty, weak foreign investment, low growth, and currency issues have made consistent capital appreciation difficult for many investors. But that's where dividend investing shines, allowing you to earn passive income even when the broader market seems to be going nowhere. Whether you choose REITs, telecoms, banks, power companies, or conglomerates, the core principle remains the same. Pick resilient businesses with strong cash flow, sustainable dividends, and proven long-term demand. And remember the inverse relationship. Dividend yields often go up when a stock's price drops. This means today's low market conditions can be a strategic entry point for long-term investors. Of course, it's crucial to do your own research, understand the risks like cyclical earnings, and diversify your holdings. If you want passive income, stability, and reliable cash flow, the Philippine dividend landscape still offers compelling opportunities. These are found if you know where to look and commit to a long-term horizon.